Hello guys, and welcome back into this video. In this video, I want to go over the top setups that I'm watching for this week. And in this week, I definitely do have a lot of setups that I'm looking at. I have bullish setups, so if the market does run, I have two bullish setups, as well as if the market does turn to the downside, I have a nice put play that I want to go over. In this video, I'll be going in very in depth. The contracts that I'm looking at, the price target, the stop loss, very in depth. So if you guys do enjoy content like this, make sure to subscribe and make sure to leave a like. Subscribe with notifications on. Also, make sure to go to SundayStockTalk.com to check out my completely free newsletter. Check this out and please take advantage of this newsletter where you can get weekly stock tips every single week for free through your email. And as always, also check out Moomoo, link in the description. You guys can get a free stock with Moomoo. I have a link in the description with my referral, and you guys can definitely check them out. Now let's get started with the economic calendar. So first thing that I like about this week is that we don't have any major catalysts into this week. So a lot less FUD going on, fear, uncertainty, and doubt. So pretty much the only catalyst that I'm looking at is Friday. We have the PPI, which is a inflation indicator, and next week we also have a inflation indicator. But this week mostly just nothing really going on. We do have initial jobless claims, but really nothing much. So that is the first thing that I'm looking at for this week. As I went over here, this looks to be like a great week because we have less uncertainty. Now let's go into TradingView and let's go into the chart. Let's just go over the SPY the first. So the overall market, what we are expecting for the overall market. So last week, we were consolidating. And then we broke up and we had pretty much a nice run up. But now we are in a very weird position where we're just kind of hanging off here. So we broke out and we are at a major level of resistance. Okay, that is the first thing that I want to take a look at. We broke out of this ascending triangle and now we are sitting at a massive level of resistance. Taking a look at the weekly time frame, this is a massive level of resistance. Okay, this is the bear market. This is the recession mark, because if we break above this, we are breaking the trend. So this is a very weird position, and I'm just kind of being spectacle, just kind of watching out and being very careful, and I'm kind of just expecting chop city. So in the newsletter, I just kind of explain and I go over these support levels and resistance levels. So I don't have a biased opinion on the market right now, just reacting off of these levels. So the first level we have is $401.90. So this is my green line. Again, go to tradingview.com, use my link in the description, sign up and follow along with me. So we have this major level of support. So this was a previous level of resistance, but we broke that resistance and now it is a major level of support. So as bulls, we need to hold this level, $401.90. That is our level of support, and this could also be a great play to just play calls on. So play SPY calls on. If tomorrow we dump to 401, this could be a nice play by playing the bounce over here. And then the next support that I am looking at is $397. So if we do break this, our next support is this red line, which I drew on TradingView. So you guys can see this red line. We have this green line. If we break this green line, we have this red line. And again, on the watch list, I go over the exact levels that I'm looking at. So these are the two support levels where we can play calls off of. And keep in mind that we need to touch and close above these levels to be bullish. Because if we close below, psychologically, that is not good. So we need to close above that level. Now the resistance, which is kind of the roof, again, I'm going to make a whole upcoming video on resistance supports on all of that later on, but resistance is kind of the roof where it is hard to break that level, and this is actually the gap fill level. So $409 is our level of resistance. So this is kind of the roof. You can play puts here, But if we do break this 409 level, we have another level of resistance at 412, and after 412 we have 419. So it is really important that you go to tradingview.com and you chart these levels out, because again, the market reacts to these levels and you can play off of this. I'll probably do some live sessions later, probably like next 2 weeks. But yeah, this is the most important levels that I am looking at. And if you guys go to sundaystocktalk.com and click the newsletter, you guys can see the exact level. So with SPY, no bias as of right now, kind of just how it plays and how it reacts to these levels. That is what I am looking at. So again, calls here and puts, and now let's talk about the Qs, which is the tech ETF. So the QQQ, on the other hand, actually looks a little bit more bullish, because we have a nice psychological gap going on, and then we also broke the symmetrical triangle, so a potential continuation to fill the gap to the upside. SPY, on the other hand, already hit the major level of resistance. So again, if we zoom out on the Qs, on the SPY, we have this major level of resistance, which is kind of like the bear market resistance right now, and the Qs have actually not hit this level of resistance. So I'm feeling a lot more bullish on the Qs, because we have more room to the upside, and then we have this gap and the continuation off of this symmetrical triangle. So the Qs look good. Now the first play that I am looking at is AMD. Okay, this looks like a great A+ setup, and again, in this video I just want to go in very in depth on what exactly I am looking at. So the bigger picture that I'm looking at is, again, we have a massive downtrend, recession, whatever is going on in the world right now, and we have this massive downtrend, and we are approaching the level of resistance. And then we take a look at the daily time frame. First of all, we had a previous ascending triangle, which I played. So I made a whole video on this. We played it on Discord. This was a great play. So if you actually go to my YouTube, and you guys can kind of zoom down over here, and we can see this was the previous AMD play over a month ago now. So we're taking a look at AMD. We had a previous ascending triangle, and now we have another ascending triangle. And not only that, we have a nice gap. So the incentive to move more to the upside. So that is what I'm looking at for AMD. But I zoom out a little bit over here, and I have the support level drawn, this resistance level drawn, and we can see that the support, again, is making higher lows. So we are making the higher lows for the support. So we are kind of in a small uptrend on the daily time frame. And then we can see that the $78 mark is a major level of resistance. So this is a major roof, and if we break out, this could have a nice pop to the upside. And again, this also reminds me like FedEx. We had a massive ascending triangle. It kept just trading sideways. It kept touching this level of support, and once it broke out, it literally just moonshot. This play is sitting at a whopping 500% right now, and that is what I like about making these videos, because you guys can see all the success on my YouTube channel. We had FedEx coming, and now we have AMD going on for this week. So now let's get in depth on the support, the price target, our stop loss for AMD. So the first thing that I am looking at is expect some more chop for AMD. So especially over here, you can see the price action for AMD where it was just trading sideways. So the entry that I'm looking at is at the level of support, which is $73. At this case, I don't want to buy calls at the resistance, because again, I'm learning from the past where we buy calls on the resistance and we just come back down to the support and we just trade sideways, and data just kind of kills our contracts. So what I'm looking at is to buy calls at the level of support, and then we're also going to have a tighter stop loss, because then if it closes below this level of support on the daily time frame, that is going to be our stop loss, and that is going to be our loss. So from taking my previous trades, I'm going to be looking to buy calls right at the level of support. And above 78 is kind of the breakout level. So if above 78, this could have, again, like a moonshot. And then we have that whole gap play going on. So as long as if AMD holds this level of support and we consolidate and the chart gets tighter and tighter, and once it gets tight enough, it can have a nice pop. So that is what I'm looking at for AMD. I also like the risk to reward coming in, a tight stop loss, nice level of price targets, and AMD is my first thing on the watch list for this week that I am watching for tomorrow. Next, I have CCL, and CCL, in fact, I'm just going to straight up buy calls right at market open. This looks like a really, really nice, great play. So zooming out a little bit over here, same thing, recession, whatever, but this is actually a lot more different, where since June it has just been trading sideways. It has just been trading sideways, and we could see it's been trading sideways, and we zoom in a little bit over more, and then we have also been trading sideways, and then we actually have a massive gap to the upside. So I really like this play because we have been trading sideways, and then we closed above the resistance. And I just want to show you guys on how this price action is reacting, because I'm working on kind of like a whole course for this, but just take a look at this beautiful price action going on with CCL. Look how it is respecting this level of resistance. The buyers really want CCL to be above this level, and what I'm taking a look at is a continuation play to fill this gap to the upside, and our stop loss is going to be below $9.27, and our average down point, so if it goes below this, our average down point is going to be $9.27. So CCL looks amazing. It looks great. I'm just going to straight up buy calls right at market open. I hope it doesn't gap up. But another cool thing is that, again, it's a really cheap stock. So $10, it's sitting around $10. So the contracts are going to be very, very cheap. And I'm looking at 2 to 3 weeks out before earnings. Okay, we're not going to hold through earnings. So I think December 21st expiration around that could be a nice expiration for CCL. Next, we have UPS. Okay, and this is going to be our puts play, so bearish play. So just in case if the market turns red, we're going to have this. Now, previously, again, we had that FedEx play. Killer play, amazing play on FedEx. Now I'm taking a look at UPS, and I'm just going to quickly check FedEx on what it is doing. So I'm looking at FedEx and I'm looking at UPS. FedEx definitely has a lot more room to the upside. Same with UPS, but with UPS, what I'm taking a look at is the weekly level. So the weekly time frame. The weekly time frame to me looks very, very interesting, because we are in a massive downtrend and we are approaching a major level of resistance. And this downtrend isn't actually that big, if you think about it, because usually we have, like you saw with AMD, it had a massive downtrend. Okay, these stocks have been just plummeting, and with UPS it only tested like 2 times, so this is kind of just a start. So you can say 3 times, 1, 2, 3. So this to me looks like a great probability risk to reward play on puts, and not only that, we're going to have a tight stop loss. So the stop loss is going to be above the level of resistance. I'm going to color this red, but above this level of resistance, if it closes above on the weekly time frame, that is going to be our stop loss, because that means that we have broken the trend, just like Caterpillar. And that is the cool part, that we can actually take a look at our setups and we can learn from our mistakes from the past, where Caterpillar did close above the level of resistance on the weekly time frame. So with UPS, that is what I am looking at. If it runs this week, I'll take a look at a puts play going on, and we can also take a look at the RSI. The RSI is getting exhausted. And for this play, I'm taking a look at a month out calls, puts, because this is on the weekly time frame. So this is going to be a multiple day hold, potentially weeks, but puts over here, and that is what I'm looking at for Caterpillar. Now, straight off the back, I'm just going to create another play that I actually did not have on my watch list, and that is Caterpillar. So Caterpillar on the daily time frame does have a ascending triangle, so I'm potentially looking at a continuation for Caterpillar, and you can see that it is getting extremely tight. But if it does run tomorrow at market open, this can be a golden play for Caterpillar, and especially weekly call options. So that is what I'm looking at for Caterpillar, I just kind of like just looked at a chart and made this play right off the back. But Caterpillar looks very nice and very, very interesting for calls right at market open, plus a very, very tight stop loss. Now, we did have puts a couple weeks ago, but we got out for a loss. So this was a pretty big loss on Caterpillar. And if we can make back with this ascending triangle play, that could be a very nice play. So that is all what I am looking at this week. I definitely do have a lot more just A plus setups. All of these setups I'm looking to play this week, as well as like other weeks I usually had many setups, but I wouldn't play most of them. So all of these setups look A plus to me. Go to sundaystock.com, sign up, just put in your email, and you guys will get a newsletter every single week. Take advantage of this and subscribe with notifications on. Make sure to leave a like. I have a lot more educational content coming up. And then follow me on Twitter. And again, check out Moo. Link in the description if you guys want to try Moo. Overall, hope you guys enjoyed this video, and see you guys later. Bye bye.